Thank you for joining us this Friday, the 28th of April. I'm Sophia, a market analyst with Bell Direct, and this is your weekly market update. Well, as China emerged from lengthy COVID-19 restrictions earlier this year, iron ore miners rallied on our local stock market as the demand outlook from the leading iron ore importing country became strong again. Then fast forward to this month and the outlook isn't so bright, with the price of iron ore diving 11.5% this week to around $107 per tonne, the lowest levels since December last year. China's reopening hasn't quite lived up to global expectations, and a ramp up to full operational capacity in the region hasn't happened as fast as expected either. In a meeting this week, China Iron and Steel Association officials allegedly told Chinese mills to cut output. Now, China's steel mills are already losing money and are cutting output in a bid to stabilise cash flow, as the domestic prices of steel have sunk in recent times. China's crippling property market is also weighing down on iron ore demand, with the largest demand driver for steelmaking in China still struggling through recovery mode. Iron ore prices have declined this week amid a weaker than expected start to the China construction season, and that runs from April through to June. Now, developers in the region are focused on completing existing projects rather than starting new ones, which has added to the dampened demand for iron ore and metals during the time of the year that would traditionally be booming for commodity demand in China. So how does this impact our local Australian miners? Well, one stock to look at is Mineral Resources, MIN. This week, we saw Mineral Resources cut production volume guidance for FY23 from 270 to 280 million tonnes of iron ore to 245 to 255 million tonnes, amid drying up contracts, labour constraints, and new projects still being in the approval stages. This saw the MIN share price drop over 14% over the last 5 days. This morning, Bell Potter reduced their price target on the stock by 5% to $95 and maintain their buy rating. Now, taking a look at the market's performance this week so far, the ASX 200 has dropped 0.5% Monday to Thursday, as the materials sector weighed down on the market the most, dropping 2.2%. Financials, consumer discretionary and utilities are also lower, while communications services and industrials advanced. The biggest mover on the ASX 200 this week was Blackmores BKL, gaining an impressive 20%, boosted by news of a $1.9 billion takeover bid. Now, Japanese beer giant Kirin is set to buy the Australian vitamin brand for $95 per share, less any special dividend declared prior to the implementation. If the takeover proceeds, Blackmores will declare a fully franked special dividend of $3.34 per share. On the losing end, Syrah Resources SYR declined over 16% this week after the company released its quarterly update, reporting flat quarter-on-quarter natural graphite sales, as well as disappointing operating performance of its Balmer operation. Meanwhile, Invocare, Mineral Resources, Imugene, Champion Iron and South 32 were also in the red this week. And on the Ore Lords, the best performing stock was Simbo Holdings, SYM, Kogan and Blackmores, while stocks that declined the most were Tigers Ruim Coal and Synlait Milk. And the most traded stocks by Bell Direct clients this week was the Bank of Queensland BOQ, which hit a new 52-week low on Thursday at $5.78, the lowest the stock has been since October 2020. BOQ's share price has not had a great run of late, down 14% year to date. Now, New York listed peer First Republic Bank is down over 50% this week, which may have had some influence. Meanwhile, the other most traded stocks by Bell Direct clients this week were BHP, Western Mines Group and Pilbara Minerals. Clients also bought into Rio Tinto, South 32 and Fortescue Metals, while took profits from National Storage, Macquarie and Core Lithium. And the most traded ETFs this week were from BetaShares, including the Australian Strong Bear Hedge Fund, their Geared Australian Equity Hedge Fund and their US Equity Strong Bear Hedge Fund. end-to-end economic data to watch out for next week. Well, on Tuesday, it's the first Tuesday of a new month, which means the RBA will be meeting again and will announce the new cash rate decision. After remaining unchanged at 3.6% in April, the cash rate is expected to lift on Tuesday to 3.85%. On Wednesday, retail sales data for March will be released, and on Thursday, balance of trade data for March will be out, and on Friday, the RBA will provide a statement on monetary policy. And that's all for this week. I'm Sophia Mavridis with Bell Direct. Have a great day and happy trading.